Tskaka Enterprises is a nice question to test whether you know what journal entry should be passed with certain type of transactions. You are the registered financial manager of Tskaka. They are registered for VAT. The VAT rate is 15%. The financial year end is 28 February, and they give you a few of their main policies. A settlement discount of 3% is allowed if a client settles his account within 20 days after the invoice date. So there immediately you can write down for yourself the credit terms, 320. Should the client settle his account within 10 days after the invoice date, a settlement discount of 5% is being granted. Most of the clients pay the accounts within 20 days. It is the policy of the entity to always make use of allowance of settlement discount accounts. So if that is the policy that most of them is going to pay within 20 days, our allowance account will be based on the 320 credit terms. Tskaka also decided to create an allowance for settlement discount on all credit purchases. So on all debtors and purchases, we're going to have an allowance for settlement discount. Then furthermore, an allowance for credit losses is adjusted on an annual basis at 5% of the outstanding trade debtors. All credit losses written off during the year are treated as expenses. Tskaka maintains, why do they tell you that? All credit losses during the year is treated as expenses. It means that if they had an allowance for credit losses at the beginning of the year, there it was, allowance for credit losses at the beginning of the year, when we do write credit losses, we did not do that write-off against the allowance account. We basically debit the credit losses and credit debtors with the amount written off. Tskaka maintains a markup percentage of 30% on the cost price in order to determine the selling price. So 100 plus 30 equals 130. And write it down for yourself, because later on you're definitely going to use that. Then you don't have to bother with that anymore. Inventory is recorded on the perpetual basis, so watch out. For every sales transaction, I also have to adjust my inventory and cost of sales account. And then they give me my depreciation policy, which you need nowhere in the question, so for this moment you can ignore that. The following presents an extract of the pre-adjustment trial balance as at 28 February 2019. So it's year end, so it's final balances before the last few twitches needs to take place. Now they give me trading inventory, debtors, allowance for credit losses, and that's our opening balance. Allowance for settlement discounts on trade debtors, so have an existing balance, bank, trade creditors, allowance for settlement discounts, trade creditors, VAT control, and then a number of income statement items. They tell us that all the above balances are correct except where indicated otherwise. Some of these balances have to be adjusted with the following additional information. And let's quickly check what they want from us. They want from us to present the following notes to the statement of financial position as at 28 February 2019. The inventory note, trade and other receivables note, and trade and other payables note. The comparative figures and the accounting policy note is not required. Now, under the additional information that they give you, that you will see that each and every additional information bullet is something that is loose standing and nothing relates to another bullet. So by taking these bullet points one by one, and we prepare a journal entry for those bullet points, we will have all the adjustment entries that needs to take place in order to adjust these figures that we need for disclosing whatever they want us to disclose, VAT control as well. So we're going to do the answer in journal format, and then at the end of the day, we're just going to add all the debits and credits relating to a certain item, like debtors for instance, together to get to the final figure. A transaction to buy furniture from a manufacturer in Cape Town was done on 25 February. The furniture was dispatched and invoiced on the 28th of February. Included in the invoiced amount was an amount for insurance cover on the goods in transit payable by Tskaka. Now, this means that the risks of ownership has transferred to Tskaka at the date of dispatch. Why? Because they were liable to paying the insurance cover for this period that the goods were in transit. If they were responsible for paying the insurance cover, in other words, they carry the risk of that item, it means that ownership has passed to Tskaka at the date of dispatch. So then it means on 28 February, this furniture was dispatched to Tskaka. So out of a technical perspective, they took ownership of those goods at 28 February. That means that they have to take this inventory into account in their inventory figure, and they have to create a creditor because they owe the supplier the amount for that items that was dispatched. Good. Included in the invoiced amount is an amount for insurance cover. The receipt of delivery took place on 2 March. As a result of the settlement terms offered by the supplier on the value of the merchandise purchased of 510, Tskaka settled the invoice by paying 54,625 for the merchandise and 1,200 Rand for the insurance cover on 3 March. No entry has been passed for the transaction on 28 February because they were not yet received, but that was not a good enough reason. We have already established that the risks of ownership have passed, and therefore they should have taken these items into consideration. The next important thing is that the invoice value was not 54,625. They have paid 54,625. There on top, they said that we always make use of allowance accounts. So if this was the settlement terms of the supplier, it meant that when I bring this inventory into my books, I have to create an allowance for settlement discount on that creditors. Because this is the payment amount, it means that that doesn't equal the invoice amount, but this only equals 95% of the outstanding invoice. So I have to gross this amount up in order to reflect the 95%. So let's look at the first entry. We said that the 54,625 only represents 95% of the invoiced amount. So we have to determine what was the invoice amount. And the invoice amount then is 57,500 Rand. They also told me that we have paid 1,200 Rand for insurance cover. Now guys, insurance cover is a fixed amount that cannot be subject to any settlement terms. So 1,200 Rand is, remember this supplier is not the insurer. He just accommodated the insurance and paid and recovered that from us and paid over to the insurance company. So the 1,200 Rand, he's just acting as an in-between guy. So there can be no 5% settlement discount applicable on this amount. So let's take the purchase first of 57,500. 57,500, we're going to credit our creditors. That is the invoice amount. We're going to take out the VAT, so 57,500 divided by 1.15 times 15% gives us the VAT of 7,500 Rand. Good. Now, what is the VAT exclusive amount? The VAT exclusive amount is now 50,000 Rand. What do we do with the 50,000 Rand? We break it down into the two legs. 95% leg will go to inventory, 95% of 50,000, and 5% of 50,000 we're going to post to our allowance for settlement discount for creditors account. So now we've taken care of the purchase transaction. What about the insurance? There we're going to debit inventory once more, because if Tskaka was prepared to pay the insurance of the goods in transit, it means that he deems this as a necessary expense in order to get that merchandise in his possession, which will enable him to sell that merchandise to third parties. So therefore, we are also going to capitalize the insurance payment attached to these goods that he has purchased. The VAT exclusive amount is 1,200 divided by 1.15, 1044. We're going to debit our VAT control account, VAT input, 156. And we're going to create the creditors with the full amount that we have to pay over to him, the 1,200 Rand. And then we're done with the first transaction. Let's go into the second transaction. When you verified the creditors reconciliations done for February 2019, you discovered the following reconciling differences. Settlement discounts, inclusive of VAT, disallowed on a few creditors accounts amounting to 4,370 Rand. Upon further investigation, you found that although the creditors clerk debited the creditors account with this amount, she submitted a payment request too late. Consequently, when the payments were received by the suppliers, the discounts were already forfeited. So basically, we have to reinstate then the creditors accounts with that 4,370. Now, remember creditors, we're going to credit with 4,370. There is no settlement discount. This is all about the settlement discount that was disallowed. So we're going to debit our inventory now with a VAT exclusive amount of 3,800 Rand, and the VAT included in that account, we're going to debit against our VAT control account, VAT input, 570 Rand. The second part of that second bullet point says, in a few instances you found that interest was charged by some of the suppliers as a result of the receipt of payments well after the due date. The clerk never processed the charges and only showed the interest as the reconciling difference on the reconciliations. The total interest not processed amounted to 890 Rand. So we're going to debit an expense account, 890 Rand. We're going to credit this 890 Rand. Guys, because they only ask your statement of financial position, it is not necessary really to reflect everything that has got nothing to do with the statement of financial position. Up till now, all those accounts had an impact on my statement of financial position, but obviously interest isn't. So if you only made a note to increase creditors with 890 Rand, it is more than sufficient. Good. Number 3. Merchandise with a sales value of 750 Rand was donated to a charity, but this transaction was never recorded. So obviously the first thing that we have to do is to take out the VAT, because it's a total sales value, and then we're going to change that into the cost price of the goods. And there's our little cost formula, 100 plus 30 equals 130. So going back here, we said, well, the total amount of the donations, the sales value was 5,750. We're going to take out the VAT, which is 5,000 Rand. If we're going to apply our profit formula, 5,000 times 100 divided by 130, that gives us the cost price of the goods donated, 3,846. Our journal entry would have been donations debit 3,846 and inventory credit with 3,846. Once more, the donations that isn't required because I never ask you income and expense items. So if you only made the adjustment entry of 3,846 against inventory, that is more than sufficient. The next one, number 4, furniture was sold to Mr. Mabula on credit for 5,175 on the 27th of February. Mr. Mabula did not want to pay the delivery cost and an arrangement was made to collect the furniture himself on the 3rd of March. No accounting entry was passed to record the sales transaction as a result of the items which were still on the premises. If no accounting entry was passed because this whole transaction was basically ignored, it means that I also, remember it's a perpetual inventory system, so I also have to adjust my inventory and my cost of sales. The transaction was for 5,175. I always assume that my debtors will pay within the settlement discount period, and the one that I assume is the 20 days period, so it is the 3% settlement discount. Good. So the total amount of the sales transaction was 5,175. If I take out the VAT, it gives me 4,500. Then I have to break it down into the 2 legs. 97%, or 4,365 of that amount, will then be shown as sales. And 3% of the VAT exclusive amount will be shown as my allowance for settlement discount. So debtors will be debited with a full invoice amount of 5,175. I'm going to take out the VAT, and the VAT included in that amount was 675 Rand. Allowance for settlement discount will be the 3%, and my sales would be the 97%. Good. Then I must remember I must also adjust cost of sales and inventory. What was the VAT exclusive amount? The VAT exclusive amount was 4,500. Multiplied by my cost or my profit formula, where cost equals 100 divided by 130 of the 4,500, which gives us 3,462. Good. The next one, additional information number 6. An amount, number 5 here, the value of stationery on hand was 2,900 Rand. That was at the end of the year. So actually what the question wants you to do is the notes to the financial statements. So here in my notes, I'm going to tell them notes there, stationery under inventory, stationery equals 2,900 Rand. Good. Additional information 6. An amount of 4,715 was received from Magaba on 24 February 2019. This account has been written off in February 2018 as irrecoverable, i.e. last year. The bookkeeper debited bank, which is correct, and credited the debtors control account with the amount received. Now that is the wrong part of the entry. It should have been credit losses recovered, which is an income item with a VAT exclusive amount, and then VAT should have been credited VAT output with a VAT on the entry. So the correction entry will look like this. I will debit debtors to take out the wrong amount, which was credited against debtors, 4,715. I will credit my credit losses recovered with a VAT exclusive amount and VAT control with a VAT portion. Again, credit losses recovered is not required to show anywhere, but the VAT control, I need that figure to update my VAT balance. Then number 7, a credit note was issued to Mbavani at 28 February 2019 for goods returned with an invoice value of 3,680, VAT inclusive. The only entry that the bookkeeper passed was to debit the debtors account and credit the sales account with the total amount reflected on the credit note, i.e. with a 3,680. Now here's a serious problem because he debited the debtors control account, but it is for goods returned. So if it's for goods returned, then I cannot debit the debtors control account. I was supposed to credit the debtors control account. I cannot credit the sales account. I was supposed to debit the sales account. Now, Mbavani had bought the merchandise on 27 February 2019, so he's well within the settlement period still. So that means I have to reverse that entry in its entireteness. So let's have a look at this. 3,680 divided by 1.15 gives me a VAT exclusive amount of 3,200. Let's reverse the incorrect entry first, and then we know that that is out of our books. And then we pass the correct entry rather than to put up with minuses and pluses and all kinds of confusing things. So we're going to debit sales. So we take sales out. That was the entry that the bookkeeper has passed, and we're going to credit debtors. So we're going to take out the wrong entry that he has passed. So now we can start on a fresh page and pass the correct entry. Debtors had to be credited with the value of the credit note of 3,680, which we're going to pass there. Then we're going to take the VAT exclusive amount of 3,200. We have to break it down into the two legs. So only 97% of the 3,200 Rand will be posted against our sales, which is 3,104. 3% of the VAT exclusive amount is going to be passed against our allowance for settlement discount. So we're going to debit that account with 96 Rand. And then the VAT included into that account, 3,200 less 3,680, 480 Rand. We're going to debit VAT input, or we could have output, rectified the VAT output still, but it doesn't matter. At the end of the day, it will form part of our VAT control account with 480 Rand. Now remember, this guy has returned the goods. So we have taken in these goods into our stock again. So we have to update our inventory levels. How are we going to do that? We have to determine what was the cost price of these goods returned. The sales value, VAT exclusive, was 3,200 Rand. If you look at your profit formula, you're going to multiply that by 100 by 130 in order to derive at the total cost price of the goods returned. I'm going to debit inventory because I've taken in the goods once more into inventory, so my inventory levels would have increased with 2462, and I'm going to credit cost of sales with 2462. And I'm done with that correction entry. Good, number 8. The rental contract of the different shops are all the same. All the contracts were effective for the past 2 financial years and stipulate that on 1 November of each year, an escalation of 6% per annum will be applicable. Monthly rent is payable in advance on the last day of the previous month. There were no prepaid rent amounts at 28 February 2018 because the bookkeeper forgot to pay the rent for the next month at the end of the previous financial year. Watch out, 2018, so it was last year. So how many payments have we done in the current year? We have done 13 payments. It's the 12 payments of this year and the 1 payment in advance at the end of the year. The first day of the new year was 1 March 2018. So from 1 March 2018 to 1 November 2018, we paid the old rent. And from 1 November onwards, we have paid the escalated rent of 6%. So 1 March to 1 November equals 8 months. We've paid in total 13 months of rent. So that means that 5 months was at the increased value. In our trial balance, they gave us the total rent that we have recorded this year, 598,500. So if we say that 8 months was a normal rent, X, plus 5 months was an escalated rent, 1.06X, and the total of 598,500, they gave it to us. So if you're going to resolve this little equation, X equals 45,000 Rand. How many months rent was prepaid? Only 1 month's rent, which is 45,000 Rand. Was 45,000 Rand prepaid? No, the escalated amount was prepaid. So I have to multiply that by 1.06 to get to the prepaid rent for the year, 47,700. Okay, now we can complete the puzzle and we can now complete whatever was asked from us to do. They ask us, number 1, the inventory note. So starting with the inventory note, you will go back to the opening balance that they gave you in the trial balance. So you say, okay, well, inventory is 230,000. And then you go back to all the entries that you've passed, and everywhere that there was a debit against inventory, you will add it. And if there was a credit against inventory, you're going to subtract it. So you're going to start with the opening balance. You will add the 47,500. You will add the 1,044. You will add the 3,800. You will deduct 3,846. You're going to deduct 3,462. You're going to increase it plus 2,462, and that will give you then the total of 277,498. Stationery we've already spoken about, so total inventory 280,398. Trade debtors, you're going to do exactly the same. You're going to start with the figure that they gave you, 55,800. You're going to look at all your adjustment entries. Everywhere where debtors is, you have to adjust your account. Here's the first one, so you're going to add the 5175. You're going to add the 4715. You're going to deduct the 3680, you're going to deduct another 3680, and then you're done with debtors. Allowance for settlement discount, you're going to start with what they give you for the allowance for settlement discount on debtors, 1,300. You're going to go back to all your entries that you've passed, and you're going to have a look where is the entry that has an impact. There's one, plus 135 Rand. I think that was the only one. Oh, there was another one, 96 Rand. Where was that? Oh, there it is, 96 Rand. Less than 96 Rand, that's going to be my total allowance for settlement discount, which I have to deduct from my trade debtors figure. My allowance for credit losses, there you have to make a calculation, and that is my net debtors, 58,330. I have to take out the VAT, and I'm going to multiply that by 5%. And that also needs to be deducted from the 58,330. So 58 less 1 less 2 gives us net trade debtors of 54,455. Then I'm going to add my prepaid expenses of 47,700 to that amount. So total trade and other receivables, 102,155. Trade creditors, you're going to follow exactly the same. You start off your trade creditors with 64,900. You're going to revert back to all your adjustment entries. You're going to add 57,500. You're going to add 1,200. You're going to add 4,370. You're going to add 890. And that looks like the end of the story. So that then will give you the total amount of trade creditors. Then allowance for settlement discount. Again, you're going to start with whatever they had. They had the 4750. You're going to go back to your adjustment entries, and everywhere 2,500 you're going to add. That's debtors. That's debtors. And it seems to be the only one that you're going to do there. And that will give you in total then 7250. If I deduct that from my net trade creditors, give me net trade creditors of 121,650. Our VAT control, you're going to start once more with the amount that they gave you. They told you here VAT control had a credit balance of 28,600. So therefore I'm going to add all the VAT outputs and I'm going to deduct all the VAT inputs. So going back to your calculations here, it's going to be minus 7,500, minus 156 Rand, minus 570 Rand, plus 675 Rand, plus 615 Rand, less 480 Rand, and that is going to be the end of the story. So that then gives you the total VAT control of 21,184. And in total then, 142,784. Remember that those two allowance accounts have to be deducted. It was deducted in the answer, so just to make sure that you don't accidentally add that, maybe put it in brackets so that you will know. And that is Tskaka.